Rick Santelli, we're going to go to now, standing by at the CME in Chicago. We saw what happened with the CPI data. Was it slightly too hot? We'll see what the PPI numbers bring in about 5 seconds. And remember, Rick, it's the rate of inflation rising now. All those previous rises we saw, we were still paying those. So I don't know what to think.
Oh, absolutely. It's like compound interest, except for inflation isn't nearly as much fun as compound interest. And here we go. The December read on the producer price index, the wholesale inflation gauge, down 0.1% on headline. That is lower than we expected. And if just to put it in perspective, if you look towards October of last year, we had down 0.4. So even though it's good news, been there, done that in a bigger way. Ex-food and energy unchanged. That's 0.2 lower than we expected. And that would end up being the third unchanged on core in a row. And the last time we had a number that was lower than unchanged or zero was April of 2020 when it was down 0.3. Ex-food, energy, and trade, it's up 0.2 exactly as expected. That's 1/10 hotter than the rearview mirror. And the last time we were over 1/10 was September when it was up 0.3. Now, I think the better numbers here that I like to pay attention to year over year. 1.8 on headline, 1.8, 0.2 less than expectations, 0.2 less than the rearview mirror, and 1.8, let's see how far back we have to go to get a lower number. 1.8, you're going all the way back to pre-January of 2021, which is where my database comes up with 1.9, and that is lower. So that is very, very good news. Ex-food and energy year over year, 2.5. That's the same as we were expecting. It was the same as the rearview mirror, but last month was moved down to 2.4%. And just to put a face on it, 2.4% is the lowest going back to February of 2021, but we moved one tick higher than that revision. Now, what's the aftermath of this? The market likes this number, Joe, better than it likes CPI, and I could see why. We've moved down a couple of basis points. We're at 399 prior. We're at 396, 397. We're down 6 on the week on 10s. We're down 11 on the week on 2s. And European maturities in gilts and in boons, they're actually higher on the week. So we're starting to see a dual speed with respect to central banks and how markets are trying to price slowing of the economy versus central bank activity. Back to you.
So if grocery prices are 30% higher than when Biden came into office, and they're still going up like 3.4, when are they going back down? They never are.
I don't think they will, Joe. That's the whole point.
They never will.
That's the whole point.
What about energy prices?
If you look at CPI,
what was gas?
that CPI energy, oh yeah, we're over 80. We're over 80 now. And what's the headline in the Journal today, Joe? Just as we get back on our feet, just as the Americans are LNGing and helping out the world, there's pushback now. The Biden administration is getting pushback that, we got to curtail some of this LNG natural gas activity. I certainly hope not. There's a lesson to learn here. I emailed you yesterday. I remember clearly in 21 when Mark Fields bought all those Teslas. And I remember looking at my compatriot that was in the room saying, boy, that's going to end up being a bad trade. That is going to be the poster child of why energy prices are going to remain sticky for a long time. And we're all going to be paying more for everything. That rent-a-car deal, you think that's going to translate into lower prices?
Yeah, that was something. Deciding what we're all going to be renting. What if they throw a war and nobody shows at a party and nobody shows up? That's the problem. Thanks, Rick. Steve Liesman joins us now. Thank you. Now with more, what's going on, Steve?
Well, you see yields are falling. Stocks doing better. Let me just preface what I'm about to say by, if you're not confused, you're not paying attention. And here's what's happening right now, and this is what I think happened yesterday. This PPI number, which is really showing, again, deflation up the pipeline here. And I'll give you some numbers. Food down 0.9% on the wholesale level. Energy down 1.2%. That was up in yesterday's CPI. And the trade component, which tries to take a measure of profit margins, down 0.8%. What happens now is the PPI, a lot of components feed in to the PCE, which comes out in 2 weeks. What I think happened yesterday was people look at the CPI and said, well, it's a little bit hotter. But let's just wait, because the wholesale price story has been one that's been positive, at least in terms of inflation improving, and that feeds into the PCE. So I think what's happening right now is, for example, we went into this number with Fed expectations for that March cut at 69%. Now they're at 78%. Of course, this moves around. It's very volatile, and that's for the March rate cut. So this is a reset from yesterday, and the market has gotten, Joe, very sophisticated now at looking at the PPI, how it feeds into the PCE, and then resetting inflation, Fed expectations off of that. We didn't used to talk about the PPI. You used to cut me off minutes ago. Now it's more important. Look at how the market is moving. That's what's going on, Joe.